Coming up on today's episode.
Sometimes, and I do this a lot with the first-time buyers where, they might actually really want to buy a home in a short space of time. So we might do what I would call more of a flexible rent vesting strategy, which is what I did for myself. So buy a home to live in for a period of time and then go back to rent vesting, but using some of the capital gains tax exemptions to do that. So that has to be in the city that they live in or in an area they're prepared to live in for a period of time. So it's not a one size fits all. It's very dependent on the individual person. And for me, that's the fun of it. And and my parents did this as well, they traded the way up to where they really wanted to live and the type of property they really wanted to live in. It just means that you pay a little less tax along the way, which is nice, but also that you're then not trying to sell a property that's gone through a boom, but is now in a sort of a stagnant market.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Now, if you've been scrolling TikTok looking for investing advice that's really clear, no BS, and kind of addictive, then you've probably already seen our next guest. Trent Alexander has built an engaged community on TikTok and Instagram by making property investing simple, fun, and actually understandable, which is a feat, by the way. So he works, he's been in the business a long time. He's so knowledgeable. I'm so excited to have him on the show today. So he's coming to us as a property advisor from FINR Advisory, and he's been helping Aussies buy smarter, avoid mistakes, and grow long-term wealth. And today we're talking strategy, mindset, and the difference between a great advisor and a good advisor and a bad one, and what a difference it can make. So Trent, welcome to the show.
Oh, thanks so much for having me. It's great to be here.
Of course. Like I said, Karina, our marketing manager, we usually troll TikTok and who's giving property advice, and then we have our bit to say. But we came across your profile and I was like, damn, this is engaging. And I'm like, he's so accurate. And I loved your suburb review stuff that you did.
Cool.
Just because it's so clear, so easy to understand. And then your commenters are all kind of agreeing with our sentiments. And I'm like, okay, so our listeners need to hear from this person. That's what I'm hearing.
Yeah, awesome. It's a good feedback. It's interesting depending on the suburb that I do. Sometimes people do get a little bit upset with me because I'm just very honest. And we'll probably talk about that as part of what I do. I feel like it's not really my role to convince someone of a particular location, but just to be honest about, what you're getting if you buy in one area versus another. And we go from there. But sometimes people don't love that.
Yeah, that's true. And I think some people get the whole, just to give the example, my grandma, we've been raised in Noble Park, which is not an affluent suburb, if you know it. And she gets very cut if someone says something negative about Noble Park, you should see it. Yeah, 45 years, no problem.
Yeah. My grandparents are in Deer Park. I don't think it's too much different, to be honest. So I get it.
They get real cut. So.
Yeah.
No, I totally get it. I'm so keen for this chat.
Cool.
So I think the best place to start with any, good story is your story. So, you went from new home sales, now you're content creating, and then you're working in the, buyer advocacy space. What's your background and how did you end up right here where we are today?
Yeah, I've been a property tragic it's my whole life basically. So I was really lucky that I grew up in a family that was pretty pro property, and I've got uncles and grandfather that was in different trades, and then my mum got into new home sales, and so from a really young age I was exposed to it. So I actually started working in display homes, giving out brochures on the weekends when I was 14 and 9 months. First job I ever had, and I've done it ever since. So it's kind of great that it's worked out because I don't actually think I'm good at much else. I've never done anything and never worked in a different industry, but I've found my way through the industry into, I guess, the part that I like the most. So yeah, new home sales was fun. I did it for 7 years, really enjoyed it. And it's primarily dealing with home buyers, right? I think I can only remember having ever dealt with one investor the whole time. And I found, they were really unemotional about it. And at the time I didn't understand why. It was really different. But then through that 7 years, I had done a few things myself, learned a lot more about the industry, what's good, what's bad. And I realized that, my interest just went in a very different direction. And also building a new home really changed as well. The costs were really, they pretty much doubled in a 5-year span in Melbourne. And people I found more and more started to focus on all the wrong stuff. It was about how nice can I make this look so that I can post pictures on Instagram and make it look really, shit hot. But I was like, all this stuff is the stuff that when we're putting display homes together, we say we can be risky because in 2 years' time, we move on and we can, we no longer have to associate with what that looks like. But if you're building it to live in, you want it to be something that doesn't feel like it's not on trend after 5 seconds. Like you got to actually design for your lifestyle a bit more. And so I just lost interest with the whole industry. And that's really actually how I found out about property advisory and buyers advocacy. I didn't know it existed, like probably a lot of people. Yeah. The industry is really big and people don't understand that there's actually a lot of different roles that people play. And so I just fell in love with that part of it. And yeah, it's been another 7.5 years. Here I am.
There you go. The rest is history.
The rest is history.
I think it's so true that I got into property at 18 and it just doesn't leave. There's something about it. It's very addictive when you start to understand it. And then it's got so many layers that, from the surface, people always say, oh, there's a real estate agent. That's real estate. No,
there's more. There's a lot more than that.
And new home sales. Yeah, the fads, I think was the matte black, accessories, like doorknobs, black taps. And now we've got a bunch of people 5 years later like, why the hell did I get black taps?
100%. That's what it's like. And I think people don't realize, like the builders, they do a lot of research into the demographics and the nationalities of people in a particular area when they're building a display home. And they market that, but they only have to be there for a year or two. Sometimes 3. And so they can be risky because, then they take all the photos off their website and they do whatever's on trend at that time. So it never, like, even when my mum first started in the industry, the houses were pretty basic.
It was very stock standard.
Very stock standard. I think they still had carpet runners in the hallways. Like it's really quite ugly, but it's gone, I think, too far the other way now, right?
Yeah.
And now everything has to look like perfect and it's expensive to do and it doesn't actually add value.
And we've got all the, me and my partner are culprits of this. We had our own build page on Instagram.
Yeah, you have to, right? Like it's part of the deal.
It's part of the deal. It's cute to look back on now and go, oh, cool. Like I remember being excited for pieces of wood being up on a property. The frame stage. It's like, wow. And it's like, now I'm like, no, you couldn't pay me to go back to that time.
No, that's right. Yeah.
But I digress. And, we're talking about, new home sales and then like you shift into property advisory. What is FINR Advisory? And like, let's kind of explore the business side of things. Like what kind of clients do you work with mostly now? Yeah.
So we work probably a little bit more with investors than home buyers, but we're not exclusive to one or the other. We're really lucky. So I'm lucky to be at FINR where we have a combination of internal finance. We have a brokerage and we have buyers advocacy. And then I sort of sit in the middle as the property advisor. So working with both sides, which is really helpful and sort of tying everything in together. And that's, I think, the difference between a lot of property advisory versus buyers advocacy is what we do is we really invest in the clients to make sure they understand why they're buying, what they're buying, where they're buying it, and how it actually aligns to their greater goals and strategies. So we basically work with anyone who wants to build wealth through property and or doesn't yet have the dream home that's really important to them. So it's about how to navigate buying property in a way that's actually going to deliver your lifestyle outcomes. It's not really the property outcome that people are trying to achieve. It's a lifestyle. I want to live in a certain area. I want to be able to not work so hard by a certain age or have a particular passive income at a certain time. That's what we're actually trying to do. We're helping facilitate that through property investment.
I love that because, I've had buyers advocates on the show, as you know, we cover a lot of it. Now listeners would know that because we like to give you something different. But property advisory is something that's often talked about and it kind of blurs the lines between buyers advocate, property advisor. What's the difference? But you just kind of put it in such a nice way of saying you tie the knot together.
Yeah, absolutely. And I think the difference is that I will tell a client when property actually isn't the right fit, right? At some point, B isn't going to deliver absolutely everything. So that's kind of back what we spoke about at the start about the honesty of it is to say, look, property gets most people the vast majority of their wealth. But at some point, you might actually want to engage a financial planner because you've got enough property or you've achieved what you can through property and you're just going to rinse and repeat the same kinds of things. So buyer's advocacy is great for once you know what you're trying to buy and where, making sure that you buy the right product in a particular street and don't overpay and that sort of stuff. Yeah. But there is a whole layer before it that I think is probably the most important part. And it's also something that people can engage with on its own as well. So, it's it should be better known, I think, than it is. But, that's just one of the things that it's part of the reason why I started to put content out there, is to actually promote what the service is a bit more. So hopefully it's starting to happen.
Oh, I think 100% it is. And going into this, the business and property advisory side, you've built this platform to help investors make smarter decisions. But let's talk about what that actually looks like day to day, right? So, what does a property, we've talked about what a property advisor does, but what are some of the biggest mistakes, I guess, in this role that you see first-time investors make?
Probably the biggest mistake I see people making is not actually thinking beyond the purchase they're about to undertake. So how does this property that I'm about to purchase, how does that fit into a larger strategy or goal? Buying a single property isn't a strategy. That's kind of the problem, is that people don't understand that. And then you layer that with people get really fixated on a location. So what I do is explain to them that what we need to do first is determine what goals you have. Then we determine how much you can spend. And then we start to actually map that out of where we can make that work. And I think the one big mistake is people at the moment, especially, they'll get fixated on a particular city at a particular moment in time. You've probably seen this. Melbourne's finally starting to be a place where people will actually buy. And 6 months ago when I said that, people online were like, you don't know what you're talking about. And I was like,
you just have to repost the shit out of that video.
Yeah, exactly. But people buy once the secret's kind of out, right? So you want to get a little bit ahead of that. But also it's within any particular location, for the same price, you could be buying a really good product or a really awful product. And the difference is, where it's located in a suburb or a street or anything like that. So there's a lot of layers to it. And I've just found for whatever reason, that part of it is the part that excites me a little bit more than the advocacy side.
It's different.
But it is different, yeah.
Because it's goal setting, and it's the exciting part of being part of that journey and opening their mind up to so much more than one transaction. Because I think you're right. In terms of investment, I think you probably get this a lot with first-time investors. It's, I'm buying my first property. It's but do you have a big enough deposit to buy your first 3? Yeah. It's is that the strategy?
Yeah, exactly. And if it's not, that's totally fine too. So a lot of the times when I work with people, we talk about, let's say you've got a goal to get a portfolio of a certain size, maybe you want a $5 million portfolio. We can do that with just a few purchases. We can do it with quite a few purchases, right? So you want to make sure that you're starting down the path that you're expecting to continue down. I think ultimately people just focus on stuff that's really easy, and usually that's the worst stuff to be buying. And I see it a lot that for some reason people do a little bit of research and they start looking at property, and then the buyer fatigue kicks in really quickly. Yeah. And then that's where the decision making and the objectivity of it all seems to go out the window real fast.
It's true, because you can't, they get so exhausted by the search, and then they start saying just whatever, whoever's going to let me have their property, I'll buy it, whatever. And it's no, this is the type that you don't make that decision. Help is there and it's available, and it's about knowing your options, listening to these kinds of podcasts or following Trent's content that's going to help you get to that. Gee, maybe I should pause and get someone to do this.
Yeah.
Help me out.
I can't tell you how many times I've spoken to a real estate agent where we were looking at a property, it was under competition, or we've gone to an auction, and then all of a sudden I'd say, where did that underbidder go? The amount of times an underbidder in auction has bought significantly more inferior property on the same day as missing out at an auction has happened so many times. It actually astounds me.
That's amazing.
And I've got agents. And agents will tell me, they're like, you outbid them on this one. They went around to the dodgy pocket around the corner and spent $100,000 less on the same day. And I'm like, what a shame. They've just gone and bought a significantly inferior product. I think just through exhaustion.
That's awful.
Yeah, or frustration. It's crazy. It happens a lot.
Yeah, because I haven't experienced that firsthand, where I've seen the same set of buyers at the next auction, for someone else in a pocket I've been in. But that's unbelievable to me that, it's devastating that they're at that point of exhaustion. Yeah. You don't need to get there.
No. I always say to clients the purchase of a lifetime comes around once a fortnight.
Yeah.
So just chill out, It does. Honestly, you'll fall in love with something new really, really quickly.
I love that thought, because you don't know what's lurking in the shadows behind closed doors. What's
100%. Yeah.
What is on market today? We're again, I haven't found what I wanted. It's 2 weeks.
Yeah.
There's another cycle.
Yeah.
New properties are in. It's that one you thought was the best one sold for way too much.
Yeah. Exactly.
So I think, we're kind of touching on this a bit, but I guess one of the things that I want to unpack is the asset types when it comes to property, right?
Mm-hmm.
So what kind of properties do you help people buy and how do you figure out what's right for them? Because I imagine there's always a different strategy at play.
Yeah, absolutely. So we buy almost always established property, so very rarely brand new. And we do have some expats and overseas investors where sometimes they have to, but otherwise it's established property. The biggest difference between some of the briefs that I have is whether or not they want to be a bit more active and undertake more hands-on type development, a lot of duplexes or a granny flat, that kind of thing. Probably 50% of all my clients we just want a really good house. We will sometimes buy a villa or an established townhouse as well. But we're happy to look nationally. So, all the major capitals and some of the bigger regions, preferably towns with at least 30,000 people or more. So really it's about understanding sort of where the budget takes you and looking at, there's no perfect property, right? So there's always a bit of give and take. So we have to align not just the budget for the client, but usually the rental yield and the holding costs as well. And that will take us to particular areas. But again, with the goal alignment is sometimes, and I do this a lot with the first time buyers where, they might actually really want to buy a home in a short space of time. So we might do what I would call more of a flexible rent vesting strategy, which is what I did for myself. So buy a home to live in for a period of time and then go back to rent vesting, but using some of the capital gains tax exemptions to do that. So that has to be in the city that they live in or in an area they're prepared to live in for a period of time. So it's not a one size fits all. It's very dependent on the individual person. And for me, that's the fun of it.
Yeah, because you don't know what to get, right? It's not like this is our strategy and how we buy and that's it. And then you have to fit in this box because a lot of the time people's circumstances are so different, relationships are different, motivation, so much goes into property.
Yeah.
So, and I like them. I haven't really heard someone use rent vesting in that term, like that flexible rent vesting where they're going to do it for a period of time and then go back. That's interesting.
Yeah, I think it's really underrated. I've done it myself, and partly because I'm the kind of person that I know I want to have my own home. I don't want to be a renter long term, regardless of the size of my portfolio. But I also like to move around a lot, right? And my parents did this as well. Like they traded the way up to where they really wanted to live and the type of property they really wanted to live in. So I was kind of used to it anyway. But it just means that you pay a little less tax along the way, which is nice, but also that you're then not trying to sell a property that's gone through a boom but is now in a sort of a stagnant market, and you've got a capital city market that's starting to run away from you. And that's what a lot of first-time rent investors do, right? They're usually based in Sydney. Almost all my rent investor clients are Sydney pretty much, increasingly Brisbane and Melbourne, but mainly Sydney. And so they'll buy regionally, it'll do really well, but they're not ready to sell once it's had the best part of its growth. And all of a sudden, they've got a property that's quite difficult to sell because, that the timing isn't right. So that's also a bit of a safeguard is if you're rent investing in the same city, then the cycles they're not at the exact same time, but they're usually, months apart rather than years apart.
Yeah,
so again, it's all about risk mitigation and just being honest about where a particular market is in its cycle.
Yeah, and that's the key component, right? It's like your timing is also crucial, as well as location and asset type.
Yeah.
And I kind of like my next thing I wanted to ask was like, is there a type of asset or, certain metrics in suburbs that you will book, like if they have something that you'll just totally avoid it and go, it's not a good idea. Like in terms of, I think a lot of buyers advocates probably agree, apartments being a good investment opportunity.
Yeah.
Even if
Yes. Yeah. I think for me, probably the biggest thing that I talk to clients about is a lot of the terms that people use and associate with real estate are just wrong. So the whole location thing, for me, I'm like, it's asset selection. You can spend, $800,000 in a really nice suburb, in a major capital city and buy absolute crap. And you can spend the same money in a different suburb. Yeah, it's probably not going to be as aspirational, but you can actually smash it out of the park with your asset selection. So I think asset selection for me is a really big one. I'm not a huge fan of apartments. I think realistically, the older style apartments, they only really ever worked in Sydney. I think we've done a really bad job in every other city to embrace apartment living, and the quality of the stock isn't there. And people are voting with their feet. They're just not paying good prices for the product. Yeah, for me, I much prefer to buy a a house on a block of land where you could probably do like a duplex style development in future, that would be my favorite type of investment, purely because you're still actually able to create family sized accommodation at the end of it. So I'm not a huge fan of trying to squeeze 4 or 5 townhouses onto a lot where a homeowner would want to buy a duplex where it's one of two. I think what you really have to do is you have to focus on, regardless of where you're at in your journey, focus on the product that a family wants to buy. Because usually got 2 incomes, they've got deeper pockets, they often are not buying for the first time either. So that's the cohort you should be targeting. It doesn't really matter where you're buying, you should be buying. If I was a homeowner and I wanted to live in this location long term, what streets would I live in? Where would I not want to live? What kind of products do I actually want to buy? Whereas down your market significantly, really quickly.
That would, and that's a really good tip for our listeners, that idea of who are you buying for? Like, yes, you, of course.
Yep.
There's facts, there's data that you want to make sure it all lines up. But that resale or that renting, who are you renting to? It's like, if that whole area is made up of, like, let's say the demographics, say it's 60%, families with children. And then you want to go buy the 1 bedroom, 2 bathroom, no car space place and go, I'm renting that for, top dollar.
Yeah. It's not your market.
Suit the area, that's not the market you should be playing in. So,
100%.
And this is like why people would come to you, someone like yourself, to look at these factors and kind of make sure that you're across that due diligence. That's so important.
100%. And sometimes where the suburb reviews have come from is to kind of dispel some of those myths around particular locations. And I think there's also that sort of train of thought of blue chip wins all the time. I can give you plenty of examples of why that's not true either. So I think, like I said, the whole asset selection part of the process is the most important. I'd argue that if you get the asset selection right, if you have to buy and there's a bit of competition, you pay a bit more than you thought. If you buy the right asset, you'll get it back in spades. So that's just how I've become so passionate about the strategy part of the buying process.
Yeah, 100%. And it comes in like all your content as well, like that's for sure. And that's exactly why you're here.
Awesome.
But I want to go into our next segment, which is a fan favorite, and this is myth busting with Redditors.
I like this.
So I was like, okay, be prepared. Are you ready to play?
Sure.
All right. So for those of you that are new, that are tuning in, this is the part of the show where we talk about myth busting with Redditors. So I've gone on Reddit and I've read real confusion, real comments and real opportunities. We're going to set the record straight with Trent today. So let's dive in. Some of these are pretty harsh, but pretty funny as well.
Yep.
This first Redditor says, property is a scam now. The boom's over and you're just buying debt. This one comes up a lot online. What's your take?
I mean, it's bleak. It's pretty bad. To have that kind of mindset, I think, is the problem there. Look, I think there's no one market. It's having these broad brush approaches and points of view is just not helpful. My attitude is you have to just play the game the way it's being played at the time, right? And in any market at any one time, there's really good value and there's not great value. But people have to live somewhere. Yeah, I think that there's elements of our industry that need to and should change. But if you're waiting for that to happen, I think you're going to be a little bit disappointed.
I think your mindset will probably stay the same.
Yeah, I think so.
No, great comeback to that one. It's just what I saw.
I don't think shelter is a scam.
Yeah.
that's probably a better response.
Yeah, shelter is not a scam. Next. This next one writes, all these advisors just get kickbacks from developers and sell overpriced houses and house and land packages. Oh, God. Let's break this down. What's the reality and how do you stay transparent?
Yeah, this is actually a really good one. I respond to comments like this all the time. And again, it's that whole part of people don't understand how many different roles people have within this industry and who their alliances are for, right? So what they're talking about in that comment is project marketing, right?
Yeah.
So project marketing for some people seems really obvious to spot and others it can be really deceitful, right? So if you walk into, I don't know, a land sales office, for example, and they're selling you vacant land, it's kind of assumed that they're only going to sell you the land they have available, right? It's like walking into a Mazda dealership. They're not going to sell you a Mercedes.
Yeah.
But they don't charge you for advice, right? So they're selling you a product. You are the product in a lot of ways. So the difference is if you want to work with someone who's actually going to mold a strategy around you, you have to pay for it. So I think the problem is that people, again, are taking a solution that seems easier. There is also a reluctance to pay for advice, which I understand. There's enough costs as it is, but that's how you fall into some of these traps as well. So yeah, it's a tricky one because property is unregulated, but a buyer's agent and or a property advisor is not the same as a project marketer or anyone that sells anything off the plan. It's a completely separate part of the industry. And I do my best to try to actually sort of give people those definitions and explain what the differences are. But also there are businesses that deliberately market themselves as advisors when it's pretty clear that they're not. And you would know this because we get approached by them every single day, being offered several multiples of what we charge clients for to sell products to people, which is awful. So it does go on. You have to be really, really careful.
Yeah, you do. I think that was well answered, to be honest, because like you said, you often find out who the players in the real estate game are by going through it. So it's like the first time you meet, you think real estate agents are just, that's what a real estate person is. But then when you go to build a house, you go to the display home, you meet the sales agent there. They're selling that product. Looking at all product and understanding that advisors like yourself, we're not product specific. Yep, we're
Correct.
Specific to our service and what I can do for you.
Yeah.
But I've got no product bias. You've
Correct.
got treatment like a mortgage broker. I'm not selling a product at CVA.
Yeah.
So.
Yeah, and that's a question I get a lot is, so you're a financial planner. I was like, no, I do property only. But people don't realize that financial planners usually don't talk about property at all because it doesn't fall within their licensing to give advice on property. So basically, the way I explain it in simple terms, hope you didn't want simple answers because I get on a tangent pretty quickly, but...
No. I don't want simple. we want simplified language.
Yeah, cool. But yeah, effectively, the easy way to explain what I do is basically I'm like the financial planning equivalent in property. That's a simple way to understand it and explain it. But yeah, if you're trying to determine who is worth trusting, just follow the money trail at the end of the day. Who's paying them? It's a pretty good understanding of what you're up for.
I like that. This next Redditor says, you don't need help. Just use realestate.com and do your own research. I have my own personal graph. There's a big kind of movement happening at the moment. I say like DIY has always been the way of Aussie thinking, like, uncle at the barbecue, auntie, like whoever it is, that person who's going to give you advice because they've historically done it 20 years ago and you should use their conveyancer and you should use their broker, and then you can see that this broker's like on their last friggin' legs.
Is this a good idea? Yeah.
You kind of trust it. And now we're moving into this space of like, okay, people are becoming more aware of property advisors and content online has skyrocketed. What do people miss when they try to go it alone, in your opinion?
I think they have no idea how to benchmark a property at all against another property, against a different location. I think also we're at a stage kind of just in our maturity as a country where it's harder to buy a good quality product today than it ever has been. It was different for our parents and grandparents, right? Like most people were buying standalone homes because that's kind of all they had to choose from. Now, for the same budget, you could be buying, people are prepared to live in different parts of the city. You're comparing I'm comparing often for the same budget, a house versus a villa, a townhouse, an apartment, and showing clients, well, look, you can basically live wherever you want. What you're changing is the product, but when you change the product, you actually change the financial outcome you're going to achieve significantly. So you can buy a loan. The vast majority of people still do, but I also feel like they often don't understand what comes next. Is that if I'm a first-time buyer and I want to live in a $2 million home and I want to have all the bells and whistles, for the vast majority of people, you're going to have to trade your way up there. So the difference is if you get that right the first one or two times, you'll get there really efficiently. So what I want to do for my clients is actually try to limit the amount of transactions that they need to undertake to get where they're trying to go.
Yeah, make it more efficient, more streamlined.
Yeah, if I can save you the mistake of buying the wrong property, just in the stamp duty alone, you're talking about hundreds of thousands of dollars just straight off the bat. Yeah, so that's the biggest difference. And most people, I would say the biggest mistake people make is that first home is being really short-sighted with the stage of life that they're in and what's appropriate. And they often sell them actually within a few years a lot of the time.
I found that on the market like pretty recently, like they'll buy the first property because it used to be you hang on to your first home probably 7 years, I think was the average, and you get rid of it. That might have been true probably 4 or 5 years ago. What I'm seeing now is like after 3-4 years, they're trying to trade off or trade up or just go somewhere completely different. And it's like, oh, how interesting that that's shifted so much. But it's because they're not in their, they're in their starter home. They're not in their first like family home. They're in the starter home.
Yeah.
So this will be good enough. They've probably moved in either by themselves or as a couple, and now they're growing their family. They're like, oh shit, this 3 bedroom's going to get too big pretty quick.
Yeah, exactly. That's absolutely like your starter home should be somebody else's kind of dream proposition, you know, and not that it has to be brand new or that it has to be really nicely renovated, but if you can turn it into that, that's the gold, and that's the part people often miss. But yeah, so you can absolutely do it on your own, but I think it's never been harder to do it on your own.
I couldn't agree more.
Yeah.
Like you said, our grandparents had maybe 1 or 2 options.
There was also no regulation back then. My grandparents built their home room by room as they could afford it. They lived years without proper flooring. Like, you can't actually live like that anymore, which is a good thing. But yeah, they never had a mortgage either because they just built it as they could afford it. So they never borrowed any money. So
I love that story when you told me that they built it brick by brick.
Yeah. I mean, my grandfather's a roof tiler by trade. So he, you know, luckily was in the right kind of field and knew all the right people to do it. But I think when people could try to make comparisons around different generations and property, the response I always have is, actually, we just live completely different lives in every facet of life today than what we did then. So you can't isolate the property component of that and then start to talk about, you know, things have changed, it's too expensive, it's not fair. Like, I mean, how many of your grandparents were doing gap years after high school or having you know, a piece of equipment in their pocket that they could basically run a business from? Like, we just don't live the same lives in any way, and property's no different to that.
Yeah, it's like you can't compare.
No.
Love that. And this is the last one here. I like this. I like this so much because it's just like such a typical thing. Okay. This last Redditor says, interest rates are too high. I'll just wait for the crash. How do you respond to that?
I mean, which crash? Like, what constitutes a crash for you?
Yeah, sure.
It's relative to a particular city, you know, Australia in general, but then also a segment of the market. I mean, if you want to wait for a crash, just buy a high-rise apartment. I mean, they've been crashing for a long time. So it's just too broad of a statement, right?
Yeah.
And interest rates is an interesting one because there's a lot of stats that show that not everybody's maxing out their borrowing capacity, an amount of people that buy cash at all. Interest rates don't affect every segment of the market in the same way, unfortunately. So yeah, you might be a bit disappointed if you wait for the crash.
Yeah, just buy that shit asset and you'll be right.
Exactly.
Prove a point. Loved that. Thank you for playing that with me. I really like that segment, and I know our fans do as well. I want to switch gears a little bit and let's talk about, you know, like bringing all of this into reality with some client stories. You know, can you share, you know, one client story or a result that you're really proud of?
I've got a few, but one that comes to mind, and I guess it's kind of a moment in the relationship that I really love, is when I actually say to them, you don't need any more property anymore. You know, like when I've had clients that, you know, they live in Perth and we bought them something in Tasmania and Brisbane and Melbourne. And we said, guys, you've actually got everything you need to achieve your goals. So just enjoy your life and you'll get where you're trying to go in a particular time frame. That for me is the best part of the process. You know, sometimes people get a bit addicted and they want to get more hands-on and they want to increase the goals, and that's fine. But for the vast majority of busy working people and families, to just have it, you know, tick along in the background and then knowing that their retirement is all sorted is the best part. So yeah, I always get really excited about the clients I've had where we've built the majority of their portfolio, if not all of their portfolio with them. And we've spread it around different markets at different times and just really gotten the outcome for them right. Just the most enjoyable part.
I love that because, you know, you're with them for a long time. It's not a quick turnaround to be.
They're stuck with me.
Too bad you're going out. But that's awesome. Like, what a rewarding experience for you to see, but also for them to be told by someone, hey, we did it according to plan.
Yeah.
Just relax if you want to relax.
There's nothing more you have to do if you don't want to. Or you'll get exactly where you need to go. Yeah, exactly. That's the most rewarding for sure.
Because like I always say, like when I hear something like that, and people question, advisors are this, or, you know, buyers advocates are this. And I'm like, what's the price you would pay to have someone make that phone call to you to say, hey, we did it. You did it. You achieved your goals. It's all sorted. You can relax. It's like your retirement's done and you're in, mid to late 30s. What is that phone call worth in your eyes, that someone's helped you achieve these goals because they understand it? To me, I'd throw a crap load of money at that.
Yeah.
Something. If someone could just manage it for me, I think even we know as our own, we do it for everyone else, but when it comes to our own purchases, it's like, oh, shit, I don't have time.
100%. Yeah.
I'm going to do it eventually, but I don't have time.
Yeah, exactly.
And I'll end up going to someone else. I'll be like, oh, listen, I know you're a good advisor. You do it for me.
100%. I remember how long it took me to buy my property. And then when I bought for my brother, I think we bought the very first property that we went to auction on. And they were like, oh, that was stressful. I was like, we looked for about 3.5 weeks. Like, what are you talking about? Like, I was very specific with what I wanted, but it took me a couple of months to find the right product. But you don't lose the enthusiasm if it takes that long either. That's the key. Yeah.
And one other thing is, I guess, in terms of like everyone you've worked with, what's your favorite type of investor to work with? Like, if you had a favorite type of persona or asset or strategy?
I think my favorite type of investors are that sort of couple with young kids where they kind of live pretty busy professional lives, because they're just the most open to being led down the path and doing it properly. They're kind of too busy to let the noise of the industry get in their way, and they just go, look, and they usually already have a home, which is a lot easier because then it's just investment decisions. So they're probably my favorite, just because they're usually professional people. So they're good at what they do and they get paid accordingly, and they are happy to outsource the parts of their life that they don't know about or not as good at. And that's probably the bulk of my clients that I work with anyway, just because that's kind of the nature of what I do. So that's probably the best avatar and the most common avatar. But from a personal enjoyment perspective, I do get just a huge kick out of the first time buyers getting it right, because it's one of those things where they just don't understand the implications of getting it wrong until they get it wrong themselves, or someone they know really closely to them gets it wrong. And that older cohort, oftentimes they're prepared to pay for advice because they've already made a mistake.
That's so true. I feel like a lot of my business in the past when I did it full time was second time buyers. It's
always.
Like, I'm not doing this again.
Yeah, exactly. Yeah, I know. And you just wish you could like bottle that like perspective and knowledge and give it to the first timers and say, this is not as costly as you think it is. Yeah. Based on the outcomes that you can achieve.
It's like that little bit of risk, and goes back to that question, like, what would you pay for someone to tell you we found your first home? And you didn't have to do much apart from doing what you've already done, the hard work. You saved, and everything else is moving in the right direction.
Absolutely.
Pay a premium for it every time. Before we kind of wrap up, for the people that are nervous, like who are tuning in today and they're feeling overwhelmed by investing, or they're kind of on that edge of like, this sounds really good, but what do I do? What do I do? What's your best advice to help them take that next step?
I think in general, we don't really take seriously enough how much money we're spending when we're buying property, right? So, you should be doing a lot more research than what you spend on a holiday or a car. I don't think that the average person does that, unfortunately, which is a bit of a problem. What I would say is that buying the right property is more important than buying tomorrow. So just don't feel as though purchasing anything is kind of that milestone that you need to hit. It's the right property. If it's 2 years later, it's probably a much better outcome than buying crap tomorrow. And I think it's that perspective that people sometimes lack until it's too late, because once they've bought it, they get that perspective pretty quickly. They know they've made a mistake sometimes. And I think if we can avoid that, I think the whole process can be easier than people make it too, but they have to take it seriously up front.
Yeah, 100% agree. I think there's so much good in what you said, especially like there's so much to property, and it's like you just got to take that time. Don't just buy because it's available.
Yeah, exactly.
The worst.
Yeah. 2 weeks and the next perfect property will be there. So don't forget that.
Yeah, that's right. Every 2 weeks is not a cycle, guys.
Yeah, exactly.
Thank you so much for coming on the show today. I've thoroughly enjoyed this chat, and I think we need to have you back. So
Sounds good.
Yeah, I think we're going to get into suburb stuff. I think I want to have you back. Let's unpack and fire up what you do on TikTok.
Love it. Thanks for having me. This has been great, and I've enjoyed your podcast. So I'm a fan. I'm a listener. Your TikTok content is you're in my algorithm at the moment as well. I see a lot of your videos. So yeah, it's good.
Apologies. It is the lady behind me, Karina. Makes me do dumb shit.
Well, it entertains me, if nothing else, so that's good.
Oh, I'm glad.
Thanks
Thank you
heaps.
so much for tuning in and being on the community. I always love that.
My pleasure.
Massive win for me and for our listeners too to actually hear from you.
Awesome.
So thank you, Trent, for joining us. This has been super valuable and entertaining. So if you want to learn more or connect with Trent via the show notes, then check out his content on TikTok and Instagram. You will definitely learn something. You'll also have a laugh. And he'll sometimes respond to you. Don't be rude. But as always, don't forget to subscribe and follow us for more No BS Real Estate podcast and other episodes like this one. Thanks for being here, Trent, again. And thank you, everyone, for tuning in. That's a wrap for this episode of the No BS Real Estate podcast powered by Abodey AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodey.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodey AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodey.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.